Welcome back to Gold Rush Reporter, your front row seat to everything happening in the world of gold, silver, and precious metals investing. Today, we're diving into the current state of the markets with special insights from Michael Pento, a seasoned money manager at Pento Portfolio Strategies. If you're stacking metals, watching trends, or simply trying to make sense of the chaos in global markets, this is the video you don't want to miss. Let's start with the big picture, liquidity. Right now, markets are running on fumes. AI bubbles, overvalued tech stocks, and extreme equity valuations are creating an environment that is anything but normal. According to Michael, we are facing the biggest stock bubble in history, 220% of underlying GDP. And while that doesn't mean an immediate crash, it's a warning that high beta assets, including volatile metals, need careful handling. Michael's strategy? He's dialing down exposure, reducing his portfolio from 40% net long to just 15% net long, while favoring low beta defensive positions, healthcare, short-term bonds, and carefully selected shorts. The key takeaway here is risk management. When liquidity dries up, it's not about panic. It's about preparation. For precious metals investors, the implications are huge. Gold remains the standout performer in this environment, offering stability as high beta metals like silver and platinum fluctuate. Even though platinum has strong industrial ties, its scarcity makes it a critical piece in a well-rounded precious metals strategy. Silver, meanwhile, is highly sensitive to both industrial demand and market sentiment. A liquidity crisis could hit it hard temporarily, but for long-term stackers, that volatility is an opportunity, not a threat. We're also seeing unique dynamics in the broader market. Rising interest rates, the drying up of reverse repo facilities, and the potential unwinding of the yen carry trade all point toward the early stages of a liquidity crisis. This is the kind of environment where understanding not just the metals themselves, but the economic forces behind them becomes crucial. So whether you're a seasoned investor or just starting your journey, today's insights are about staying informed, protecting your assets, and positioning yourself to benefit when the tides turn. The takeaway? Gold, silver, and carefully selected platinum holdings are not just investments. They're insurance in a market that's increasingly unpredictable. Now that we've set the stage with the market overview, let's dig into the specific risks and opportunities facing investors in gold, silver, and platinum right now. Understanding these dynamics is what separates casual observers from savvy stackers. First, liquidity isn't just a buzzword. It's the lifeblood of the markets. As Michael Pento highlighted, when liquidity starts to dry up, high beta assets like tech stocks, AI-related investments, and even industrial metals can get hit hard. That's why we're seeing volatility in silver and platinum. These metals have real industrial value, but during periods of uncertainty, they're also subject to sharp price swings as investors scramble for cash. Next, we have structural economic risks. Michael points out that the US economy is carrying massive bubbles in equities, real estate, and credit. When these bubbles start to deflate, it could trigger broad market sell-offs. For precious metals, this isn't entirely bad news. It often means that smart money flows into gold as a safe haven. But for silver and platinum, the industrial link adds extra risk. Prices can fall even as demand fundamentals remain strong. Interest rates and monetary policy are also key, with the Fed potentially pausing or cutting rates depending on economic conditions. Real interest rates can plummet. That's historically been the sweet spot for gold. Silver often follows, but its dual role as both industrial metal and monetary metal makes its moves more dramatic and less predictable. Now let's talk strategic positioning. Low beta defensive metals like gold provide stability. Platinum, due to scarcity and industrial applications, can outperform in selective scenarios. Silver is the wild card. Its price reacts to everything: investor sentiment, industrial demand, and geopolitical developments. Stackers need to recognize that volatility in silver isn't a signal to panic. It's a signal to act intelligently. Finally, don't overlook global factors. Central bank behavior, trade policies, and geopolitical tensions all affect supply and demand. Michael mentioned how Japan, the US, and other major players influence currency flows, interest rates, and liquidity. Every move in these arenas can ripple into metal markets, sometimes in ways that catch mainstream investors off guard. In short, this isn't a time for guesswork. It's a time to understand the forces at play, protect your holdings, and strategically position yourself for both short-term fluctuations and long-term gains. As we dive deeper into the market, let's talk price action and momentum, because understanding these is what turns a casual investor into a true stacker. Silver has been the headline metal lately. Over the past few sessions, we've seen it flirt with critical levels around $51 to $52 per ounce, with intraday swings topping $52.50. This isn't random. These levels represent psychological and technical resistance. If silver can break above and hold, we could be looking at the formation of a triple top breakout, which historically signals strong upside potential. The support level at $50 is now proving resilient. Every time silver dips below and then recovers, it reinforces the idea that investors and stackers are stepping in to defend it. This kind of buying behavior is crucial. It creates a base from which metals can rally. Remember, holding above $50 consistently isn't just a number. It's a statement about confidence in silver's ongoing demand. Now, looking at the Relative Strength Index RSI and other momentum indicators, silver is showing consolidation above the mid-50s RSI. That tells us the bulls are gaining control, but it's not runaway yet. This consolidation phase is key because it sets the stage for a potential parabolic move if external catalysts like geopolitical tension, industrial demand, or monetary policy shifts come into play. Gold, on the other hand, is playing its classic safe haven role. It's less volatile than silver, barely moving in response to day-to-day fluctuations, but quietly holding value above critical thresholds. Platinum is the sleeper metal, scarce, industrially crucial, and historically capable of outperforming during tight supply scenarios. Stackers who understand these subtleties can position themselves to capture gains across metals without overexposing to risk. Another factor to watch is the gold to silver ratio, which has slipped below 80 to 1 recently. That's a long-term indicator suggesting silver is becoming relatively undervalued compared to gold. Historically, periods when this ratio narrows have been lucrative for silver buyers, signaling a potential shift in buying patterns. Geopolitics and macroeconomic developments continue to impact prices. Supply disruptions, policy changes, and central bank movements all act as catalysts that can send metals moving quickly, sometimes more violently than stocks or currencies. Being aware of these forces and watching how prices react in real time is essential. For stackers, the takeaway is clear. Watch support and resistance levels, monitor momentum indicators, and pay attention to macro signals. These will tell you when to hold, when to buy, and when to consider profit-taking in a market that is dynamic and fast-moving. Now, let's shift our focus to global dynamics, because silver and gold don't move in isolation. They are affected by governments, central banks, and international policies. The United States, for instance, has officially recognized silver as a critical mineral in 2025. That's a game changer. It means more legislation, tighter regulations, and likely incentives for domestic production. We're not just talking about industrial uses like electronics and solar panels. Silver is now being treated as a strategic asset, essential for national security and energy infrastructure. This recognition will drive both investment demand and physical accumulation, putting long-term upward pressure on prices. Across the globe, Australia has also prioritized silver in its critical mineral strategy. Meanwhile, China continues to manage its exports strategically, limiting supply to key markets. This coordinated scarcity from multiple regions signals one thing. Governments are preparing for a future where silver is not just a commodity, but a geopolitical lever. Let's talk about central banks. Russia has started actively purchasing silver for its reserves, leading the way in state-level accumulation. India, too, has taken historic steps, allowing silver to be used as collateral for loans, effectively monetizing silver in a way not seen in decades. These moves indicate that silver is not only a store of wealth, but also a tool in monetary policy. Meanwhile, Western central banks are more cautious, holding back on significant silver purchases, but the supply-demand imbalance is undeniable. Physical stockpiles are shrinking as industrial demand surges. With AI infrastructure, EV production, and green energy technologies driving consumption, the structural deficit in silver is only widening. From a strategic standpoint, stackers need to recognize the signals. Governments and central banks are acting to secure silver, while the general market is still underestimating its scarcity and strategic importance. That's your window to accumulate, but smartly. Diversification matters. Holding a mix of silver, gold, and strategic metals like platinum can protect against volatility while capturing growth. It's also critical to stay on top of geopolitical risks. Conflicts, trade restrictions, and export controls can shift prices dramatically overnight. The markets are no longer only about supply and demand. They are about control, policy, and strategic positioning. For stackers, this means be proactive, understand the forces shaping silver globally, and maintain diamond hands on your core positions. Timing the market perfectly is impossible, but recognizing structural trends and geopolitical maneuvers gives you a massive edge over casual investors. As we wrap up, let's put everything together. Silver is no longer just a commodity or a niche investment. It has become a critical strategic metal recognized by governments, central banks, and industries across the globe. From the US, officially classifying it as a critical mineral, to Australia and China taking steps to manage supply, the signals are clear. Scarcity and strategic value are rising. Central banks are starting to accumulate silver, India is monetizing it as collateral, and industrial demand from AI, EVs, and green technologies continues to explode. Meanwhile, physical stockpiles available to investors are shrinking. This is the perfect storm for a bull market in silver, where both industrial and monetary demand converge to drive prices higher. For stackers, the lesson is simple but critical. Act strategically, not emotionally. Maintain diamond hands on your core positions. Diversify with gold and platinum, and stay informed about global developments and geopolitical risks. Supply disruptions, trade restrictions, or new legislation could move prices dramatically and fast. Those who understand the global dynamics will have a massive advantage. Here's a reality check. Silver's structural deficit isn't going away anytime soon. Miners can't bring new supply online overnight. It takes years from discovery to production. Combine that with rising demand and government recognition, and the upside potential is massive. Triple-digit silver isn't a dream. It's a very real possibility, and early positioning is key. Remember, every ounce of silver you hold is more than an investment. It's a hedge, a store of wealth, and a statement against a volatile financial system. The market is signaling that physical silver will increasingly outperform paper assets. Don't wait until the mainstream catches on. By then, the best opportunities may have passed. If you found this analysis valuable, actionable, and insightful, make sure to hit the like button, subscribe to Gold Rush Reporter, and turn on notifications so you never miss our updates on silver, gold, and critical metals. Stay tuned for future videos where we break down market moves, global developments, and opportunities to protect and grow your wealth. Thank you for watching, stackers. Keep your diamond hands ready, stay informed, and ride the bull market wisely.